Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 25th, 5:31 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we remain in an uptrend. You can see the four arrows over here, which means that all five of the major indexes are trending above their short-term 21-day exponential moving average, their medium-term 50-day moving average, and their long-term 200-day moving average, and market leadership acting well also. So what happened today? Opened basically flat to mixed and put in the bottom pretty quickly. Uh, Semiconductors and software led what was a nice but mild uh, trend up all the way up to from 9:30 all the way up till about 2:30, and then a bit of a fade the last hour. Gave up quite a bit of the gains, but all in all, big caps had a good day, particularly the NASDAQ 100, the S&P 500 leaders acted well. AI software stocks acted well. Looking into FOMC tomorrow, the market uh, didn't trade tentatively. Now, granted, small caps did lag today, but the market, it's a bull market right now, and the market's acting as such. That doesn't mean that that can't change tomorrow if you get a curveball from Jay Powell during the statement or the press conference. The market is expecting a quarter point rate hike and mild chance of another one before the end of the year, but that's probably going to be dictated by what economic data comes out. We've got two CPI reports after this FOMC meeting before the September FOMC meeting, and that means we've got two employment reports too, and a lot of data always coming out. We'll see what happens, but bottom line, pretty good day for the market. RG8, this is our 8 growth ETF composite, up 1/3%. S&P 500 also up about 1/3%. NASDAQ 100 led up 0.7. 6 of the big 7 up. I'm going to show some stats on the rebalance later on in this video. Dow just barely higher, but 12 straight sessions up now for the Dow, so good for the Dow. Mid caps up 0.2. Russell 2000 barely positive. Global diversified 60/40 stock and bond up 0.17. Bonds down slightly, traded tightly, but down slightly. Hey, that rhymes. I'm a poet and I didn't even know it. Okay, GROTECTION, nice number, up 0.64%. Leading stocks doing their job in the portfolio, as well as SSO up over 0.5% on the day. We'll hit the tail of the tape and some charts, as well as those rebalance stats. Let's get right into it. Here is the S&P 500. And you can see a nice little trend higher along this 8-day exponential moving average. Let's contrast that with what was the leading index, the NASDAQ 100. We've been really looking all the way since back in the middle of June for some type of sell-off. We said it could be through price or through time. We ended up with a combination of both. We had, uh, let's bring up my marker here. We had one sell-off here, not very sharp. We had another sell-off here. Then we had a rally and then a third sell-off here. And all these did note lower highs on the relative strength line. This last hurrah to the upside, a lower low on the relative strength line. All this did is bring this more in line with what the S&P 500 is doing. So really, if you look at the relative strength line and start here and go here, the NASDAQ 100 has basically performed in line with the S&P 500 since this gap up at the end of May. And that's what happens to overbought big cap indexes. And the contrary to this was the action of the Dow Jones Industrial Average, which lagged for a significant period of time and now is leading or led kind of even with the S&P over the last 3-4 sessions. But like I said, 12 nice up sessions and a breakout for the Dow Jones Industrial Average. Let's go back to the S&P very quickly so you can see the intraday action. Here's that mild gap down at the open, a nice trend, higher highs, higher lows, and then a little bit of a fade into close, 45.81, making a new high. So taking out the high of last week by a couple of points, settling back. But it's a new closing high too for the recovery. So good stuff for the S&P. A lot of rotation took place in here into non-tech sectors. In fact, I saw a stat that 94% of the gains in July so far have been by non-tech stocks, non-tech sectors. So uh, playing catch up. That's called. Let's flip now to mid caps and small caps. Here's the MDY putting in this really nice uh, bull flag here after a nice run up here. You can see why they call it a flag when you just draw it like that. Small caps, same situation, putting in a nice flag here after a nice move up. That's the flagpole, and there's your flag. And we've got, if we break out above this 199.20 area, that's a clean breakout going back to February. And then after that, we can attack. We got a lot of room to run on the small caps. Let's say you can see back here in September and October, we also hit that 200 level. So an extra layer of resistance, so to speak, there, which isn't showing up on the daily chart. But all in all, good stuff, acting like a bull market should. Pullbacks getting bought, no significant damage. It's not to say that there aren't going to be blowups in stocks as it is earning season, but we minimize our positions of anything that we're holding going into earnings, as we detailed last week with Tesla. Uh, it won't be until NVIDIA earnings in about a month that we've got a position size situation that we'll confront again. So those are the 5 major indexes. Let's go to, let's start with the VIX. Very tight range on the VIX today. You can see basically just a blip hanging on this declining 21-day moving average. That's a positive sign for the markets. Note we are coming off of oversold. However, if you come off of oversold, look at how we haven't been able to get to overbought, going all the way back to September of last year on the VIX. So even with this big spike up here in March, which was coincident with the uh, um, regional bank issues. Uh, the VIX has really been forecasting lower volatility, and that's what we've gotten as we're under 0.85% on the S&P 500 on a daily average true range. Let's go to the NASDAQ, and it was up over to 2.5% during the bear market also. Let's go to the dollar here. Started out higher and broke lower. So you can see the gap up in the dollar here, and it just kept making lower highs and lower lows all throughout the day. Sell-off is good for precious metals, right? Let's check silver to confirm this. So with the silver up 1.3% on the day, note how it gapped up even with the dollar gapping up. So maybe a little bit more weakness trickling into what's going on with the dollar, inverse correlation, the normal inverse correlation versus precious metals. Here you can see that the gold also gapped up, sold off, and then went higher for most of the session, up 0.56%. And GDX, we own the equivalent of 2 times the GDX by being in NUGT, up 1.6% on the day. I'll get up about twice that, 2.26%, holding nicely off of this 50-day, 21-day, 200-day moving average confluence. Go back to the GDX, you can see it looks very similar. But this is the level that needs to hold or we'll be getting stopped out, the lows of the prior 2 sessions on GDX. How about Bitcoin? We had a rough day today, yesterday with Bitcoin and the miners. Miner update today up 0.32%. Flipping over to bonds now. BND, the broad bond index, down slightly. TLT, the long bond index, down slightly. TYX, the long bond yield, up 0.9%, and TNX, the 10-year yield, up 1.43%. What's left? Nothing is left. That is everything that we discuss on inter-asset correlation. Here's the tail of the tape. But before the tail of the tape, let's bring in a review of this rebalance on the NASDAQ 100. So last Friday, before the rebalance happened after the close on Friday. Here was the big seven. There's actually 8 tickers because Goog and Google trade separately, but it's one company. So here was the big seven, which is actually 8 tickers. And hold on one second. Let's try this again. I had a formula problem. So here are the top 8. They totaled 54.6% of the index of the NASDAQ 100. After the rebal, they totaled 42.94%. So you can see the change from the prior weighting to the new weighting. The biggest drops were in Microsoft, NVIDIA, and Amazon. Notably, Broadcom, ticker AVGO, now has, you can see the weightings before, now has a 3.1% weighting, which is bigger than Goog and Google combined. So by itself, AVGO is now the 7th biggest individual name in there. But if you just go by the pure tickers and again combine Goog and Google, which you probably should, it's number 8. But look how close it is to Tesla. Tesla at 3.17 after its gap down on earnings. That impacted its value somewhat. But AVGO, which is really not named at all, in with normally with these big 7 names, but certainly catching up there. And you can see this drop of 11.66% in the individual weightings was spread out among the remaining components of the NASDAQ 100. And just to show how AVGO and Pepsi gained 0.64%, and Pepsi, the number 10 name, up 0.45%. So that 11.66% was spread among the other names. So what did it mean today in the NASDAQ 100? Well, not a whole heck of a lot. Tesla continues to struggle. We'll get into charts momentarily here, but let's get through the tail of the tape. You can pause it to get if you want to read the whole thing. I'll hit the highlights. So first of all, after earnings, Microsoft is down less than 1%. So I've got the yellow arrow there. Google, really good ad results. Google is currently up about 6% after hours. We're all looking ahead to FOMC tomorrow, Wednesday at 2 p.m. After hours, Meta reports. Meta is actually up 2% after hours. The thought there is that since Google's showing good ad revenue, that Meta should follow suit. We'll see tomorrow when they report after Wednesday's close, but the market will already be volatile, as is normally is expected from FOMC. And then Thursday morning, we've got PCE inflation data. Day count, really kind of a 4-day consolidation, although we're making a higher high, but it has been a tight consolidation. But versus the 8 and the 21 EMA continues to rock. 11 days above the 8 EMA for the S&P, 21 days, or the 21 EMA, 41 days above there. When you get above the 21, you gotta. It's like in this case, it's like a bull on a surfboard. You get on, you never know if it's going to last 8 days, 10 days, 15 days, 1 day, or over 50 days, like it did several months back. But you got to be ready for it. You don't know how long it's going to last or how long it's going to go, but you got to get your money into the market when the wind is at your back. We feel we've done a pretty good job of doing that after keeping our powder dry last year. I talked about the action today, the trend up in the fade. Here were some sectors that stood out today: gold and silver stocks. Pick, that's the base metal miners. Oils, XLB, basic materials, and XLK because of SOX and software. On the downside, dollar started positive, ended negative. Banks, there was a merger announced. Really, it's an acquisition. PACW being bought. That was one of the troubled banks, and that kind of hit KRE. The market kind of caught off guard by that, but banks reversed, and that hit small caps late afternoon into the close. Jets pulling back as the price of oil goes higher. XLRE real estate pulled back today also. No changes to the portfolio in-house. We're just adding positions to new clients that are coming on board at low risk entry points to bring them up to our as part of our assimilation process. And bottom line for the day, semis and software lead the S&P 500 and the NASDAQ 100 trended higher until the last hour fade. Let's see what tomorrow brings. Of course, we've got the FOMC at 2 p.m. Let's look at some charts now. Let's start off with what led the portfolio today. SMCI continues to be a volatile but a leading stock, up 3.9%. Celsius held the 50-day moving average. Struggled yesterday to get back above the 21, did get back above it today, but volume was disappointing, but still up 2.3% on the day. DT was also a laggard under the 21, bounced near the 50-day, or actually touched, and I touched on this yesterday, touched the 10-week moving average and bounced off of that. Remember, we're making better use of weekly charts to increase our probabilities of not getting shaken out of individual names. So after a pretty severe 5-day pullback, DT with a bounce would have liked to have seen more volume, but it's back above the 21, back above the 8. We sold a little bit, but still have a half size position in that. Live Nation reports later this weekend. Man, if they all acted like this, my job would be a whole heck of a lot easier. And NVDA had a strong day, bouncing off the 21 here, holding that key 440 level. It actually got above 460 at once before pulling back late afternoon with the rest of the market. And then we got NRGU up almost 2% on the day. This is how we're playing oil stocks. This is 10 big oil names. And we already mentioned Nugget was up 2.6% on the day. On the downside, U continues to struggle, light volume, can't get up and off this 21-day moving average, however, and stay there with any gusto. Uber, a leader, but a pullback today, gentle pullback on light volume, no big deal there. The disappointment, and I detailed this a lot yesterday, was Tesla. Showed some nice strength early, back above the 21-day moving average, tried to get through the 8 EMA and was rejected there, and then pretty weak into the close, going back below the 21 EMA. So let's look at this on a 30-minute chart here. There are several levels of support to be concerned about here. I mentioned a lot of them yesterday, but really the bottom line is you don't want to break yesterday's low. If you do break yesterday's low, you got to consider a visit down to the 50-day moving average. Although that breaking of yesterday's low, because of the big difference between the 10-week moving average and the 50-day moving average, would just also result in meeting up at 251, which is where the 10-week moving average is. Meanwhile, the 50-day moving average is all the way down at 239, another 2.5% lower. So we're playing it light here. We're keeping our position where we had the nice gains on. We sold our third buy after the gap down in earnings when it couldn't get back above the 21, and really it has been unable to sustain a move back above the 21 EMA. If it goes sideways, really what you're seeing right now is a battle between short-term holders and long-term holders. And we, like I said yesterday, we believe in the story, but we're not going to blindly believe in the story. If this is very much market dependent also. If Tesla rolls over and the market rolls over, we are coming into a seasonally weak period. We're not going to give back all of our gains. We will, in fact, cut it loose. But we want to hold it if we can hold it. When a thesis and price match up, we want to get as much money into the stock as we're comfortable with. That's where we are with Tesla right now. But again, we did gap down on earnings, and we haven't reclaimed that gap as of right now. So it is what it is. A couple of other stocks that had good days. Upstart up 17%. This is a very volatile stock, but after a 3-day pullback, it re-engaged to the upside. AEHR, which was an earnings gap winner a little more than a week ago, tried to make higher highs, but was rejected, but still had a very nice day, up 6%. And most of the AI stocks had good days today. The AI software stocks. Here's AI, ticker AI, up 5.7%. Datadog, DDOG, had an upgrade, gapped up, but closed near the bottom of the range, but still up 3.4%. Palantir, a little disappointing, but still up 1.4%, bouncing off the 21-day moving average, but failing into the declining 8 EMA. Let's see what else. MDB had a decent day too, up 2%. I believe that got an upgrade also. And Toll Brothers, TOL, nice day bouncing off the 21-day moving average. That's going to wrap it. As always, we'd like to hear from you. My email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, you can reach my partner, Dan Stewart, dan@revereasset.com. Little known fact about Dan is he is a wizard at maximizing income. If you have money that you are scared to keep in the market, but you want to maximize your income through T-bills or bonds or CDs, Dan is your man. Email him, dan@revereasset.com. We have some clients that's all we do for is generate income. They're afraid of the markets no matter how we talk to them. They want income, and that's fine. It's all about what makes our clients comfortable. So as I always say, it's not how much you make in the market, it's how much you can keep. Our goal, our strategy is to take when the market gives us gains, but don't give them back when the market wants to take them. That's what we do here at Revere. And if you're interested in this approach, reach out to us. And with that, I will wrap up the video for Tuesday, July 25th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.